thank you for joining us this afternoon. We are very proud to host this webinar session, and we are very grateful to Ilse Brews, the Manager for Secure Solutions from DSV South Africa. So a little bit about Ilse, originally from Cape Town, currently resides in Johannesburg. I don't know why you would want to come from Cape Town to Johannesburg, but anyway. Ilse's career in the logistics and supply chain industry started in 1998, and then since then she has held key positions for the top 4 logistics service providers. Ilse joined DSV in January 2018, where her current portfolio includes secure and high-value supply chain solutions. Ilse has a strong background in commercial and end-to-end supply chain solutions, with a demonstrated history of working in the logistics and supply chain industry. Ilse holds a professional graduate qualification from the University of Stellenbosch. So I think that Ilse is very well experienced to share a message with us this afternoon. So we're going to be looking at the impact of COVID-19 on technology and high-value supply chain in South Africa. So COVID has really messed up most of everything, let's be honest, but it has significantly impacted the technology and high-value sector since early 2020, affecting the supply of raw materials, disrupting the electronics value chain, and increasing the risk of rising product prices. Yeah, product prices are rising everywhere. I think it's not just in this sector. More positively, the disruption has accelerated remote working and the need to de-risk the end-to-end value chain. The impact on South Africa and the wider Sub-Saharan region has been significant, and the situation continues to evolve. The secure and high-value industries are feeling the effects as customers, whether consumers, governments, or business, and they continue to face unprecedented disruption. And I think that disruption for us in South Africa is the order of the day, and I think that it's something that we've become accustomed to. And I actually saw a joke the other day on Facebook, and it said if Chuck Norris was tougher, he could have been a South African. So there you have it. Ilse, thank you so much for being with us today, and we're really looking forward to your presentation and what you have to share. So take it away. Thank you.
Thanks, Tanya, and thanks to the SAPEX team again for affording us the opportunity. I think, yes, quite correct if you say that if Chuck Norris was tougher, he would have been South African, and I can echo that for sure, especially in the last couple of weeks with all the curveballs that's been thrown our way. But yeah, I hope that you enjoy this afternoon session. I hope that I can share some insight as to some of the challenges we've been experiencing and how we've counteracted that. I mean, there's always a little bit of good that comes out of the bad. So yeah, so today's focus impacting COVID-19, impacting more than just your health. And I suppose if it hasn't impacted your health, it certainly has impacted your supply chain in the last 16 months. So as Tanya quite rightly said, focus this afternoon would be on specifically on the technology and high value supply chain in South Africa, across the border spectrum, both from our side as a logistics service provider, as well as the importers and the exporters, the general industries, the schools, the universities, and the likes. So just taking it away, I mean, so why and how has it impacted us? I mean, at the start or end of March last year, we all sat with bated breath and received the announcement that we would go into hard lockdown. At the time it was level 5. None of us, I think, ever expected or understood what we could expect. We thought it was going to be a 4 weeks work from home, scenario, and then back to the grindstone as normal. But unfortunately, reality kicked in, and here we are today, hopefully at the end of the peak of the 3rd wave, and it's 16 months later. So how have we adapted since then? So I think key during this period has been the ICT sector, certainly in South Africa. Now, for those of you who don't know what ICT stands for, it's Information, Communication and Telecommunication sector. And certainly we've seen an absolute tremendous acceleration and the need for speed to market in the past 16 months. So all of a sudden we all went home with our laptops and our couple of files and pens and papers, and you know, how quickly you can pack up an office to go and set up at home. But business had to evolve so quickly, and in order to do so, everybody now all of a sudden, if you had a desktop at the office, you all of a sudden needed a laptop, you needed to be more mobile, you needed to make sure that your phone was capable of downloading, I don't know, I think I probably downloaded about 50 apps in the last 16 months. All of a sudden you're shopping online, so again another app that your phone had to be able to be used for. So never mind the devices that you now had to acquire, whether it's in your private capacity or from a business point of view. Together with that, you needed to make sure that you had either good Wi-Fi connectivity, or you had a modem, or a fiber line that was reliable to be able to conduct business or school or communicate from home. So all these accessories to mobilize the workforce had to ensure that we could collaborate digitally. And I think just to use another example is today. Think of this meeting and what it's made possible. We're looking forward to the second virtual SAPEX conference coming up in August. So without the ICT equipment, we won't be having this call. We won't be looking forward to another conference. And likewise, many of our customers and relevant industries have to rely on ICT devices, modems, infrastructure, network availability to keep the lights on. I think of certainly 99% of my day now consists out of either Teams or Zoom or WebEx calls. This is how we stay in touch and keep communicating, whether it be with our partners or our suppliers or our end customers. So there's three main pillars within the ICT sector. The first pillar is IT and IT equipment. And in the IT sector, we had to provide a very short-term and very quickly a short-term boost owing to the increased demand to mobilize this mobile workforce. So think of your own organizations or your own companies. I mean, you needed to do that transition to remote working within, I think, 48 hours at the time. So as the whole country moved into hard lockdown and we faced restrictions on movement during the past year. So growing availability of cloud-based solutions and network infrastructure is also there to continuously drive down the costs, because if you look at the increased costs in the current supply chain due to rates, volatile market conditions and the likes, where's the first place that your organization is going to look at saving costs? Is how can we do things faster and better and cheaper through looking at the IT sector. And the third pillar, I think very importantly, is the consumer market. So this is what is commonly referred to as your HHD or handheld devices market. So I don't know how many of you went out in the last couple of months to go and upgrade either a laptop or obtain a new mobile phone or even a tablet or iPad. So we certainly have mobilized everything. A lot of spend took place in that market sector in the last 16 to 18 months. But because the lifespan of most of these devices are 2 years, we're definitely expecting a downturn in the consumer demand in this sector, purely because everybody is now mobilized and everybody's got the latest devices that they can afford. So definitely we'll see a downturn in the spend in the consumer market, and not just because everybody's got the latest devices or obtained the latest model, but also because of the tremendous amount of job losses that we've seen since March last year as a result of COVID. So there's no more money in the pocket. There's no money to go and buy the new phone or upgrade your device to the latest model or version. However, the crucial nature of the telecom services, both for general communication as well as a tool for home working or homeschooling, will offset some of these pressures. So we'll still see a lot of movement in the sector, but maybe not at the same high levels as we saw certainly in April, May and June last year. The last pillar is obviously the data center construction market. So here we predict quite a steady growth of up to 12% per annum up until 2025. So if you think of your own organization, I mean, to be able to have all these remote dial-ins and workstation setups, you need to have the network infrastructure to support this. Everybody always talks about, is it in the cloud? Did you save it on the cloud? So all of this is supported by your data centers or your servers within your organization. And to be able to support this drastic growth sustainably for the coming years, we will see this market increase, specifically around South Africa, Morocco, Kenya, and Nigeria. So another big topic, of course, since that's come across since March last year, is the increased risk. So just looking at the latest statistics as of 28th June this year, we've again seen such a big increase in our just unemployment rate. It's grown up to 32.6. So this is the official statistics. And I think personally, it's far higher than that. If you look at your informal sectors, specifically now, KZN, Gauteng being affected by the rioting and looting. I mean, all those spaza shop owners, the small little mom and pop shops, I don't even think those figures are included in this, but it certainly has had quite an adverse effect on our economy. And these job losses, of course, I mean, a lot of people have to put food on the plate. So how do they make money? The crime is increasing almost at the same level. So we're sitting with increases in hijackings and crimes just around supply chain movements and cargo movements up to 24% year to date. Really has seen unprecedented high levels. And so what we've done is really try to analyze to see where does the majority of this risk sit. So if we have to take the supply chain into different segments, we had to become highly focused on protecting our clients' cargo from the start. In other words, from supplier all the way to either last mile delivery to business, or even the end consumer where they're now residing at home and receiving their courier parcels that they've bought via e-commerce or online platforms. So we had to, together with our client base and our partner base, increase the awareness on cargo that will create more robust and secure supply chain solutions. So maybe just to give you an idea, I mean, we had to revisit all our current secure processes, ensure our staff are vetted. Are we doing criminal checks? Are we doing lifestyle checks? Reference checks, whether it's the guy picking up the pallet in the warehouse or just sticking a label on the box. So we had to increase the awareness throughout these different components. We had to look at routes that we utilize. Do we add additional security on those routes? And not just for commodities that in the past would be considered high risk, so maybe a cell phone or a laptop, or high-end retail type commodities. But at the moment, we're talking about general food stuff, things that guys can get their hands on it and sell for R2 down the road and get rid of easily, or even put food on the table. So the risk portfolio has also changed quite a lot in the last 16 months. And just some of these challenges that we've also identified within the supply chain areas are obviously the increase in hijackings, not just of big commercial vehicles, but also personal vehicles. So if we're making a small home delivery in a normal unmarked vehicle, it's a normal sedan car with one of our owner drivers, we had to place extra security on those type of deliveries as well. We've also seen a marked increase in business burglaries and robberies where certain sites will be targeted, sometimes randomly where they see an opportunistic or opportunity to have a gain, or sometimes also, and more likely, that it's executed with military precision in a lot of the cases by very organized syndicates. And then we've also seen an increase in non-organized crime. Again, the opportunistic crime, a vehicle waiting outside of a warehouse. It looks like it might contain a couple of crates of beer. Those have all of a sudden become quite a big target as well. So I think another part where it's really also affected us is with our carriers, our third-party carriers, ports. So these are main ocean freight ports around the world, and airports. So maybe just to highlight some of the biggest challenges that we did face is the disruptions due to country lockdowns. As South Africa went into and out of lockdowns, other countries either followed suit. So there was no real set time that we were all in lockdown. It fluctuated based on the rise and decrease in infection rates in those countries. So, of course, the supply chain had to try and stay or keep up with these type of trends and market conditions. So country lockdowns resulted also in closed borders, so international and cross-border borders, and therefore no passenger travel. I can't remember when last I got onto an aeroplane. So normally we would be planning our next Christmas holiday and the likes. But I think for a lot of us, there's so much uncertainty that we're a little bit hesitant to make these bookings long in advance. So of course, that's got a big ripple effect on cargo capacity as well, as a majority of the cargo or belly capacity is reliant on passenger travel to move cargo. So the air freight industry is reliant on this to a large extent to facilitate trade. And we've seen a lot of these traditional passenger flights and routings still not back in operation in a lot of the markets. Airlines, in addition, as well as shipping lines, are still very much in a survival mode. So how do they make up the losses that they've incurred? How do they think smarter? Do they add a scheduled flight back into the mix? Is it financially viable to do that? So really it is fluctuating a lot, and yes, with the volatile conditions, and I'm sure all of you have seen the prices that you're paying on air freight per kilo is probably 3 or 4 times that we paid pre-COVID, and we'll touch on some ocean freight volatility shortly as well. Certainly the demand for air freight space has increased on both imports and exports. I mean, at the onset of COVID, everybody was scrambling to try and just get cargo into South Africa as soon as possible. And if you look at the picture on the right, this is literally what we had to do. We strapped cargo to the seats, the empty passenger seats, just to make it more economically viable and to get the cargo into South Africa as soon as possible. And of course, now that we as a country also started rolling out our vaccine program, that's also putting added pressure, especially on the air freight capacity that we see at the moment. The global air freight export market or air freight market is still severely disrupted, and in some cases, we still see on average about a 7 to 10 day lead time to try and load secure space at origin, which is normally pre-booked well in advance, just to make sure that we can get the cargo moving as soon as possible. Then just touching on some of the impact of COVID on ocean freight. One of our biggest trade lanes or trade partners in South Africa, as we are an import company or country, is ocean freight out of China. So for the past couple of months, we've seen severe shortages, especially in 40-foot high cube containers, and there's a number of reasons for that. Certainly when China started locking down factories and port operations in early January 2020, that obviously created an equipment imbalance on a global basis. So as soon as they started opening up production facilities in China, you found that there wasn't enough equipment to go around, so not enough containers, vessel or carrier rotations changed. Some of the vessels omitted certain ports, causing congestion and ripple effects in other ports. So it's really a snowball effect and a continuous knock-on effect on the whole movement of containers and cargo around the world. Freight rates, I mean, do I even need to say anything? We've seen unprecedentedly high ocean freight rates, specifically on this route over the last year. And then, of course, in addition to this, we're also experiencing delays in South African ports. So, yeah, I mean, recently I see that Transnet this morning declared force majeure because of the hacking of their system. We're reverting back to manual processing, or trying to process the movement of containers in and out of South African ports as a result. This is putting tremendous strain both on importers, exporters, logistics service providers, transporters, everyone through the bank. And just as we thought we saw the light at the end of the tunnel after, with relaxing of some of the COVID regulations and the impact of COVID, we had the Suez Canal issue, which also created a massive equipment and carrier rotation volatility. And then lastly, 2 weeks ago, I remember waking up on the one morning, just seeing everything on the news with Durban burning, the rioting and the looting that took place in KZN and Gauteng. So not just the destroying of the cargo and warehouses and burning of trucks and the looting of cargo, it really has affected the port operations and also the infrastructure, just the roads leading in and out of the port. So really, I think I can definitely mirror what Tonya said earlier. I mean, we really have had our fair share of disruptions in the supply chain in South Africa in the past 16 months. Just maybe to touch on some of the rate issues. This affects every single component in your supply chain. A lot of us, I know, have entered into long-term contractual agreements. So if you committed to either a partner or a client in the last year or so to a certain contractual rate, I think we all are literally chewing our nails at the moment. We've seen probably the highest price hikes ever, certainly in my career since I've been in the industry, of between 300% and 400%. And this is just on ocean freight rates, specifically out of the Far East ports, and just in the past 4 weeks, an additional 30%. So this affects the in-consumer goods, the price that we pay for a litre of milk on the shelf, or a new pair of tackies, or a new cell phone. The knock-on effect is at the end of the day with the end consumer, which is you and me. And this is not just limited to specific trade lanes, if I might mention China to South Africa, but this is spilling over into all trade lanes around the world. So there are some options of charter vessels. I think like a lot of industries and clients have tried to investigate, but possibly not always the most viable option at this stage. Then just to update on the current situation still in Far East, Yantian port closure again in recent weeks due to another COVID outbreak. We've seen severe disruption in reefer cargo movement, and again, South Africa's biggest export market is normally your fresh produce, and this is also, of course, affecting the reefer equipment availability. The lack of inbound empty containers, again, they're struggling to manage the turnaround of the equipment. Diversions even into other ports have also not proven that successful. And maybe just to put it into context and to summarize it, the likely impact as we stand today we're looking at about 765,000 TEUs and over 300 vessels affected just in the southern China region. So the experts predict that we won't see any normal operations or a clearing of the backlog any time before October, and that's being very optimistic. So now the question always remains, so with all this doom and gloom that I've just shared with you, and the challenges that we've faced as organizations, as business, as industries in South Africa in the past 16 months, how did South African companies adapt? And it's a trend that I think we're seeing more and more, and could even continue post-COVID period. I don't know when we'll see post-COVID, but really we have seen a lot of positives come out of it. So out of the detriment comes the opportunity as well. But maybe I can just share some insight and thoughts on that with you as well. So companies are obviously considering a lot more work from home environment post-COVID as a viable means. We reached out in a survey with our key customers, just trying to put some feelers out to try and understand how the COVID situation has driven an accelerated change and a change in traditional thought process in the way of conducting business in the environment. And most likely, I mean, a lot of them came back and said that they will see this as a long-term means. I see this specifically in the high-tech, your telecommunications, high-tech type electronics companies, is that they've seen the increase in productivity. Some mentioned even up to 30%. If you think the time that you spend traveling to and from work every morning, sitting in traffic, is now spent working and productively working, and the cost saving that they see in reducing the rent on these big fancy buildings, that's not needed anymore. So where do you drive costs down in your organization? Because all of a sudden your commodity or your supply chain costs have increased so much that what we've just spent time on talking about the last 20-25 minutes. How do we save costs? Let's reduce the white elephants. Let's reduce the cost on warehousing space, on actual office space. So this was definitely something that was very prominent that came out of that survey that we did. We engaged with some customers that operate big call centers. So traditionally you would probably have 200 or 300 people based in an office block. If you think of just trying to log a query with Discovery, with them on medical aid, or your insurance company, most of your engagements through call centers. So all of a sudden, these call centers also had to mobilize to a work from home environment very quickly, and they continue to do so. There was, as I mentioned earlier, definite productivity gain. Longer working hours, being more specific on who you engage with when you do engage with them. There was a move to online home learning. So just looking at UNISA, our universities and the like. So all of a sudden, all these students had to be mobilized as well. Classes had to be conducted either via a virtual type environment or online environment. I know that for UNISA, we actually delivered a lot of book backs to the students who didn't have a reliable mobile infrastructure or virtual infrastructure. So yeah, there was really thinking out the box at the time and how we could do this best as possible. And I certainly see there will continue to be more digital platform engagement, whether it's you continue to do your shopping online on an e-commerce or online application, or whether it will be continuing your meetings or sessions like we have today. This is all taking place in the virtual environment. There's new working environment. Home offices had to be equipped very quickly. I said to Tanya earlier, all of a sudden the playroom became the office, or office number 1, 2, or 3. If you're more than one person working from home or schooling from home. And then I think lastly, also online schooling. Again, also the teachers had to mobilize very quickly and create virtual classrooms. If you think the average household probably would have 1 to 2 kids, all of a sudden these kids had to be equipped, you know, to get a printer very quickly, run around, get a printer at home to print the work. You had to acquire additional laptops if you didn't have one, or an iPad or a tablet. So out of the negative, we've definitely seen a positive in growth in certain markets. The whole culture has changed of thinking out the box, increasing productivity. Where else can we cut costs without disrupting the supply chain and the business as a whole too much? So the big question that we also did ask during this survey to our clients were, and our partners, how could we as a logistics service provider provide more support? I think everybody had to think on their feet, and I just want to highlight with you and share with you today some of the key points that came out of this, is that our clients and our partners certainly look for partnerships. We've certainly moved away, especially with the big organizations, from a transactional type relationship more to a trusted advisor and a partnership. You need someone that you can rely on through very challenging and fast changing times. You also have to be reliant and resilient. So if I'm dealing with you today, I hope that you're around tomorrow, that we can continue our business. I need someone that's financially stable, that, you know, can outlay the money on our behalf, you know, VAT or duty or whatever the case be, or pay the exorbitant freight rates until internally we can make a plan and offset those costs. And then I think largely also someone to assist with managing the cash-to-cash cycle. We definitely saw big headaches and big challenges in supply chains that were run just in time. All of a sudden you couldn't replenish the stock like you normally would, so your just in time almost became out of time to try and fulfill your end customer needs. So it's really trying to manage that cash to cash cycle and offset with availability of stock. And then of course, last but not least, helping and being a partner and assisting with risk management, whether it is risk management because of increased theft and crime in South Africa, or more recently with, you know, what do we do to avoid our cargo being burnt en route between Durban and Johannesburg, as an example, because of the recent rioting and looting and unrest. So really, these were the key takeaways for us. I think on your feet, be resilient, be reliable, and think out the box. I think that's the key for us, certainly going forward. So now, if all of us could have our little crystal ball, the question would probably be, what does the future hold? And how do we see the supply chain based on the experience and the challenges we faced in the past 16 months? How do we prepare ourselves, or what can we expect going forward? So what would the supply chain look like in a post-COVID-19 world? And this is according to the experts, so obviously the people that paid a lot of money to do a lot of research to try and predict the outcome. And these are some key points I'd like to share with you today. Certainly the move back, as I mentioned earlier, to higher inventory levels and not as lean and mean and just in time as what we've seen pre-COVID. During the crisis, companies with stretched supply chains and low inventory levels were hit especially hard. And I think we still see that today. Many will choose to maintain higher inventory levels, in other words, more buffer stock. Certainly pharmaceuticals. We've seen how the support pharmaceutical products has just skyrocketed, and we need to make sure that we have enough stock, the right levels at all times. So less money at the end of the day will be available for investment and innovation. So that's unfortunately the downside. We've certainly seen a lot of acquisitions where cash-rich companies will use this opportunity to buy up smaller rivals at bargains because they're not keeping their heads above water anymore. I mean, I've certainly seen this within our own organization with DSV. First, the acquisition of Panalpina in late 2019, and then the most recent acquisition of Agility within our network. So many industries will undergo consolidations, and where we can expect more consolidation in the logistics industry, leading to fewer forwarders and airlines. And at the end of the day, you know, less opportunities to shop around, and you will pretty much have a monopoly in this market with a couple of big, strong players. What we've all seen to date is less travel, whether it's for business or for leisure. I mean, in the past, we would have had these sessions, round table in Cape Town, my old hometown, but unfortunately, we're all doing this in a virtual format at the moment. So one thing that's here to stay is the increased remote working and video conferencing. As much as some of us may dislike it, but these changes will have a considerable impact. I mean, I think, just think of yourself. How many times, I mean, how often do you use your car at the moment? Majority of us are working from home again, and I think the last 16 months, the amount of kilometers I put on my car is probably a quarter of what I did in previous years. So this will ultimately lead to less cars being used and produced as well. So the knock-on effect is actually quite big, come to think of it. I certainly am enjoying my online shopping, the convenience. For those older school shoppers that in the past would prefer the brick and mortar, a touch and a feel. I would like to try something on before I buy it. I'd like to feel the texture first. I think we were all forced to start looking at buying online when we weren't allowed to move around during the hard lockdown. And I think the convenience of online shopping platforms and the reliability, the increased reliability, certainly in South Africa, has definitely emerged as a big winner during this crisis. We've even seen more online platforms coming on board. If you think, I mean, probably most prominent is Takealot. You think of online shopping in South Africa, you think of Takealot, and even they've got a big competitor now. So this is still continuously evolving. And I think we'll continue to do this. This will definitely accelerate the disappearance of physical stores, and we're seeing this a lot of the, you know, recently I went back to a shopping mall. I try and avoid it, but the amount of smaller little stores that had the taped up, it's closed down, is actually quite sad. But at the same time, it creates opportunity in other environments. This will, however, remain a big driver for growth, especially on the air freight cargo. Then just the importance of air cargo and freighters. So we've seen a lot of mergers of smaller charter freighter companies amalgamating and bringing back some capacity in the market. So there's the airline industry now faces what looks like a lottery still. There will be less business travel. Air cargo will favor because of the financial cost of inventory. So we've definitely seen that move, certainly in recent weeks even, with the unrest, cargo not getting out of port. Now with Transnet, the systems issue, again, we're moving everything back to air freight. So that situation, I think, will definitely continue, if not post the end of this year and into 2022. And then lastly, just the belly capacity of passenger airlines currently sit at a decline of about 11% overall. So I see some of our local, even our domestic flights are trying to entice us to fly, to go visit the family we haven't seen in almost 2 years. But I think a lot of us still quite hesitant to book flights long in advance because we don't know what the next month or week or even 6 months will hold for us. So I hope that this has given you some food for thought. thank you for the opportunity today just for us to share, or for me to share just some of our experiences in recent months, the challenges we faced, but, you know, thinking positively also where this has created, this really negative situation has created some opportunity in a number of sectors, industries, and economies for us. So then in closing together, I think the first and foremost message out of all of this and our experiences across the board over the past 16 months is we will remain stronger together. So thank you everyone for your time. I really appreciate it. If you do have any questions, please feel free to ask.
Thank you, Ilse. I'm struggling to get my camera back on here. my IT, I'm having IT issues. Yeah, I'm not sure whether to be optimistic or absolutely terrified after that presentation, I have to tell you. In my head, I'm sitting here thinking, okay, about these 300% to 400% tariff increases. Then we're moving from what we have always wanted to achieve is to reduce that inventory, don't have the inventory. Now we've got to move from that just in time that everybody seems to have perfected to now you need to keep inventory, you know, which obviously then ties up cash. And I mean, what is the potential of loss of suppliers? So amidst all this, the businesses that have closed down that were, you know, suppliers to a variety of bigger organizations here, we've lost those. You know, and then one of the drivers for South Africa is to develop the SMMEs. And when you've got things like this going on, you know, they're the first ones to crash and burn. So there's a lot to think about. And I do agree with you that there is, you know, where there are situations like this, there are also opportunities for positivity, you know, new growth, developments, innovation, and that sort of thing. But we are really in very scary times, And as you say, yeah, stronger together. I think the only way we're going to make it through this is together. And I think that partnerships and collaboration have never been more important than they are now. I think where companies have been competitors, they'll find themselves working closer together in order for them both to survive, because you just can't do it alone anymore. Yeah. So yeah, I'm somewhat shell-shocked, but I don't know. Are there any questions from anybody on the call? Anything you would like to ask Ilse? I cannot believe there's no question.
I think, Tanya, we may have shocked them all into silence.
I think that may potentially be the case here. I think that if I didn't have to speak now, I may be in that situation as well. And I just, you know, it's kind of like this tsunami. We've got COVID, then we've got the riots, now we've got the cyber attack on the ports, and it's just not ending. You know, and that the supply chain just starts to kind of stabilize, and then boom, it hits again, and boom, it hits again. So I have to tell you that supply chain professionals are the toughest people in the world.
I can't agree with you more.
Nothing on any of us, I'll tell you that much now. Sorry, Anne, you've got your hand up. Do you have a question for Ilse?
Yeah, it's not a question, but rather a comment from what she said in terms of there'll be a lot of monopolies. So I think it just looks a bit sad for the economy, because we're actually hoping that after the vaccinations, we'll start seeing the economy improve. But if this is the projection, then it's not a very good picture. But I guess pulling together will be the right thing to do going forward.
Thank you, and you're 100% right there. Yeah, I think everybody's shell-shocked. I don't know what to tell you. Yeah, that was a lot of information, and here's a comment here. Sorry, I just saw that coming in. I think with current limited flights and our ocean capacity issues, and additional stock will be air freighted with limited flights and minimal aircrafts with volumes tripled. The compromise to sea to ocean will add additional stress on air markets. So yeah, there's that as well. And I mean, with the challenges that are happening, sorry, animals at home, the challenges that we're currently having with the ports at the moment are just going to push that. And I mean, they were already not as optimal or anywhere near as optimal as they could have been. So this additional pressure is just, it's just, yeah. The backlog's going to take, I don't know how long to clean that out. And it's costing us, the consumer. We pay for this.
Yeah.
This is us paying for it. So, yeah, and when you do go to the shops, you see it.
Yes.
You see it. I saw something the other day, and I was absolutely gobsmacked. In fact, I think I stood there in the supermarket muttering to myself about the cost. People must have thought I was mad. That you last month you bought it for this price, or 6 months it was, and now all of a sudden. So it's not helping our already fragile economy. So
yeah.
I think,
and unfortunately, Tonya, I mean, we are import-driven market. I mean, you know, you think of, just look at what you're wearing today. I'm just thinking the frame of my glasses, my shoes, it's all imported. So there's not a lot of local manufacturing where we say, well, the impact of this is not really going to affect at least a smaller or medium enterprise. Unfortunately, the impact we're going to feel in everything from what we eat to what we wear to what we drive.
Everything. Sean, you have your hand up.
Yes. Hi, Ilse. Sean from Sequential. Thanks for your presentation. It was really great and informative. I just wanted to ask you, just in terms of automation in logistics and warehousing and that type of thing, is this how does this impact that? Is that going to fast track it? You know, or is it still going to be quite labor focused when it comes to that? Do you think we're still quite behind on the curve when it comes to automating a lot of the functions along the supply chain?
Yes, so we've certainly seen automation being fast-tracked drastically. I think it's accelerated the whole situation, accelerated everything. So even though in some industries you might have innovation and investment in these type of initiatives taking the back burner purely out of survival mode, in other categories or other industries, you've seen it actually being fast-tracked. So this is piloting drones to do stock counts. I mean, we certainly have started doing that in our warehouses. So those are pilot projects that we're launching. And I think also fortunate for us, speaking from a DSV point of view, we've got a lot of knowledge and innovation from other countries that we can incorporate and roll out within a local environment. So I think possibly that's where you'll see the fast tracking is with the bigger type of organizations where there's a joint effort and not purely just reliant on South African infrastructure or South African based innovation. But yes, to answer your question, we've definitely seen that in a lot of areas fast tracked.
Great, thank you.
Thank you, Ilse. Other questions? Oh, there we go. Khosi, is that how you pronounce it?
Hi, thank you very much, Tonya. Yes, it's Khosi.
Okay.
Hi guys. Hi Ilse. Thank you for the presentation. Really good. Just a quick question. What is your thought around the recent acquisition of Imperial Logistics by DP World?
Oh gosh, now you're asking me a difficult question. I think it just reiterates, Khosi, that a lot of acquisitions, we can continue to see a lot of acquisitions, especially in the logistics field. You know, where there is an opportunity, you can really afford to now buy your competitor, really. So if you're cash strong, now is the time to actually do that. And that just echoes what I said just before for closing in those last couple of slides. We will continue to see the rise in acquisitions.
Okay, thank you.
Thank you. Yeah, it's almost a delicate balancing game. I mean, if you look at the question that Sean posed about the automation and that sort of thing, for us that really is a catch-22, because we have got more people than have got jobs, and we need to employ them, but at the same time that upfront investment would have a long-term cost saving. So how do you balance it? There's an awful lot of balancing that needs to go on in the next couple of months, and it's not going to be easy.
Yeah.
But I think that, and I said it before, partnerships, collaboration, and working together is the only way that we're going to get through this or have any chance of getting through this.
Yeah.
So if there aren't any other questions, I will wrap up, but the presentation and the recording will be made available. If you have any questions for Ilse, you are more than welcome to channel them through us. We'll send out the link to the YouTube recording. Thank you for being here. Thank you for supporting SAPEX, and I'm glad that you enjoyed the presentation. I think that the sentiment is that everybody really enjoyed it. The information was really, really beneficial. And thank you, Ilse, for your time and for your support of SAPEX. Really appreciate it. It's a pleasure. Thank you, everybody, and we look forward to seeing you all soon.